Getting ready to get started with 3 at 3 right now. Finishing off a trade as we speak. Almost done here. There we go. I am done. All right, let's get started with 3 at 3. There we go. All right, so 3 at 3 is our presentation every business day of unusual option activity. We try to identify it for you. You choose to act on it. That's up to you. All right. As far as our presentation today, I have to cover number one, I guess, that you can learn more about it at marketrebellion.com/UOA. That's marketrebellion.com/UOA, unusual option activity. And you can learn more about virtually everything we do at marketrebellion.com. Tonight, we're going to have Jim Urio joining us. Jim is Managing Director at TJM for institutional sales. He is not only an institutional broker for futures and options, but also a restaurateur. So we'll be able to ask him a little bit about small business for his restaurant that I think is up on Chain of Lakes, but I haven't been. So we'll talk to him a little bit about that too. All right, let's get into the disclaimers. Disclaimer is that this is for information and educational purposes only. Period. Full stop. End of story. You choose to act on it. That is your decision. All right. This is one that I bet you wished you acted on. Last Thursday, it was going to be my second of two unusual activities on the halftime report. But unfortunately, we had so many great guests that day that we weren't able to get to it. Nonetheless, I did it that day at 3 at 3. And Datadog was $48 stock at the time. We were talking about the May 60 calls. Those of you who watched know that I bought the May 50s, which were only $2 out of the money, and I sold the May 55s against it. What's Datadog done? Oh, not that much. Just jumped by almost $10. That's all. Not so bad. And the options that they were buying, the May 60s, these are options that expire now this week. So in other words, last week they had just under 2 weeks. This week they've got about 4 days, 4 days and 1 hour, in fact, because we're almost done with today's trade. We're an hour away from the close. So how had those June 60s worked out? Well, they worked out pretty darn well. In fact, those June 60s moved up from a 30-cent purchase, which would be $30, because every option is for 100 shares of stock. Those have moved up to $2.70 right now. So that means that if you had purchased them even just last Friday, the second day after we cited the activity, they closed at $1.33. They are double that right now, trading $2.60. Bam! Now, if you had bought them for 30 cents, 30 goes into 26. I mean, this is just crazy, folks. This is almost a 9-bagger from there. Now, I did not do that. Full disclosure, I bought the 50s, sold the 55s. Now, that spread is very close right now, folks, to being worth $5. I paid about $1 for it. And the 50s, for instance, the May 50s are now $8, and the others, the May 55s, are $4.90. So right now it is worth, as you can see, $3.10. And it will be worth close to $5. So in other words, I'd have, if I paid $1 for it and it ends up going out at $5, I made $4 on a $1 investment. And to those of you who had the guts to just buy those calls outright, those May 60s, you're a very happy camper today. All right, let's get into the fresh meat. First of our 3 at 3 X bullish call buying in X. They're buying the end of May 8.5 calls, and they paid 30 cents to 39 cents. So bits of information contained in this. It's not this week's expiration. It's not next week's expiration. It's the next week after that expiration, the end of May, because this week will be the 15th. Next week will be the 22nd. The next Friday will be the 29th of May. So they're buying these 850 calls that are 20 cents out of the money, paying $30 for each one of those options, all the way up to $39, because, of course, every option's for 100 shares of stock. Now, it is right now at $8.22, so it's down 8 cents from when we cited it earlier today. These U.S. steel calls are. So you can still buy them probably for that 30-cent level. That is our first trade of our 3 at 3 call buying, end of May, 850 strike. Let's hit the next one. Bang. Micron. They're buying the $1 out of the money calls, the 48.50 calls with the stock at 47.50. So they bought nearly 10,000 of these. That would be a million share equivalent. Now, they didn't quite buy 10,000. They bought 9,500 of these calls. Bought mostly for 73 cents up to 96 cents. Again, every option is for 100 shares of stocks. That means every single option cost you between $73 and $96 for every single option that you purchase. That means that somebody is betting that on a weekly option, an option that expires this Friday, they are betting that it goes up and or that it pops to the upside. Doesn't have to finish 48 or 48.50 or higher. That'd be nice. But they're betting that it goes up in the short term. And if it does, that these options will go from 70 cents to $1 to $1.50 and so forth. You get the idea. So where is it now? A buck higher. It was 47.59 at 11:42 this morning. It is now 48.62. So it's already gone in the money by 12 cents because the right to buy it at 48.50 is worth 12 cents if it's trading 48.62. So trading near the highs of the day right now, up nearly 1%. Bang. We're holding on to these. Let's see how it plays out for a couple days, keeping in mind that if I paid, because let me see, what did I pay for these? These I paid 82 cents for these. So I'm in at $82 a piece. A 10 lot of those would be $820. I bought a little bit more than that. But $82 for these options means that my discipline is that I will cut them if they fall to half of that, to 41 cents. Now, will I hang on all the way down to there? No. If it trades 50 cents and all of a sudden they start to get offered there, I'll probably sell out. But for the upside right now, I like the trade in Micron. How have these options moved? Keep in mind, these were out of the money when we bought them. So these May options in Micron at that, the 48.50 strike, went to so far $1. Where are they right now? They're trading on the bid $1.10, on the ask $1.12. So that's 2 cent wide market. They're already up. I'm already up 30 cents off the offer because I paid $82 or $82. They're worth $112 right now. And if they start pulling back, like I say, to that 50 cent level, that's where my discipline would kick in and I would exit. If they do not pull back and they keep going up and they double, I will pull off half on a double because that is also my discipline for the upside, for call buying or put buying. If an option doubles, I take off half. All right, let's get to the third of our 3 at 3. Zoom. This is one of the hottest stocks out there, folks. Zoom. Why? Because if you look at where this stock was at the beginning of the year, Zoom, it was let me see, approximately $68 a share. So it is more than doubled, almost triple that level right now. And it has run into some difficulty up here at approximately 170, 169, 170. It has run into some difficulty up there at that level. But somebody came in today and bought the stock all the way, bought the calls rather, 2,400 of them for $1.15 to $2. Let's just round it up and say $2. That's $200 per option. So somebody paid $200, 2,400 times. So it's a $400,000, almost $500,000 trade. That's why I want to follow it. What's the time frame? This week, May expiration. Do they think it's going to go through 180? Maybe, but all it's got to do is pop, and these options will go from $1.15 to $2, $3, $4. It doesn't have to go into the money. So we'll keep an eye on it. And same discipline as before, since I paid for these $1.50, almost exactly. I bought them in several tranches. But since I paid $1.50 for these Zoom calls, that's $150 a piece. If they trade to 80 cents, 75 cents, I'll be out. But if they go, and let's see if they are going, because the stock has been moving up, my friends. This was at 941 this morning. Where's the stock now? Bang, 167. So 167 means that these options at the 180 strike, how much did they move up? Well, keep in mind, an at-the-money option usually moves 50 cents for every dollar that the underlying stock moved. But these are not at-the-money options. They're $20 out of the money when we started, because they were approximately the right to buy at $1.80 when the stock was $1.60. That's $20 out of the money. So let's see how much those moved so far for me. Those 180 calls that expire this Friday, because these are regular May expiration, the 180 calls are right now trading for, wait for it, $1.85. So am I crushing it? No. I'm winning, which is what I love to do, but I am not crushing it. They're up 30 cents because I paid $1.50 for them. They're up 35 cents, which is nice. I mean, it's a very nice gain, but I'm not taking any off yet. I'm thinking this thing gets another pop. If, on the other hand, it doesn't, you've already heard, I would exit at about the 75 cent to 80 cent level if they fall back to there. If they do not, and it keeps going, and tomorrow or the next day, I'm talking about it on our 3 at 3, and these calls are trading for $3, I'll take off half. You can bet your little whatever that I'll take off half because I'm greedy. And I want that money in my greedy little pocket because that's how you win. You don't just sit there and let it all hang out, folks. Those folks, you know, they always say, pigs get fat, hogs get slaughtered. I don't want to be a hog. I want to be a pig. And I'm going to hold on and try to get $3 for them. But if it doesn't seem like I can get that and all I can get is $2 in the next couple days, I'll just punt that because, again, these options expire Friday. It will be rare that I would hold them all the way till Friday because I don't like that time decay. The theta is just so great if you hold something all the way into the end of the week. All right. So that said, I hope you can join us tomorrow. My buddy Mark Lopresti and I will be on Money Show for a virtual trading event. We'll be talking about alternative data, how we gain an advantage trading with alternative data, and I'll be talking about that with my friend Mark Lopresti, co-founder of BattleFin. Over 600 alternative data companies work with BattleFin, and he and I will be talking about alternative data tomorrow at 11:20 a.m. Eastern Time. So if you're in Chicago, that's, of course, 10:20. If you're on the West Coast, that's 8:20. You're going to basically watch it in your PJs with a cup of coffee. You want to learn more about anything we're talking about here, folks? go to marketrebellion.com/UOA. That's marketrebellion.com/UOA. And I'll be on with Jim Uriel and my brother Pete in less than an hour. Thank you for joining us today. I hope you have a great day, and I'll see you soon if you're signed up for our event this evening. It's a free event. Or if not, I'll see you tomorrow on the Halftime Report and back here for Unusual Option Activity.